Good morning, good afternoon, good day. Welcome to my midweek market review, 9th June 2021. I'm Sagar Nandi, retired IT professional swing trading stocks using the Q systems. You may contact me using my email ID tradingprofitably@gmail.com. I regularly share live market and stock analysis on my website sagarnandi.com, YouTube channel Trading Profitably, and Twitter handle Sagar Nandi. You are most welcome to make use of them. Disclaimer: this demonstration is for educational purposes only. I am not an investment advisor. It is not a trade recommendation. Trading involves risk. You and only you are solely responsible for the outcome of your trades. These are the Q systems I use for my trading. They run on underlying TradeStation and Metastock platforms. That was the last slide. Let's continue with the live system. As usual, with a study of the global market starting with Australian index AXJO. Australian index hit the upper boundary and displayed two indecision at the top candles at the upper boundary. Today, Wednesday, it displayed a bear release signal and a bearish shape candle. Bear release is shown also here at pendulum or price extreme high. If one took a long position at the swing low when price started recovering from the yellow direction line, this would be a good time to book profit or put a tighter stop on any remaining position one may be holding. Next is Topix Index, Japanese market. Topix Index recovered right after displaying the bullish headwind signal that also created a false downside breakout at the watermark support level. In the last webinar, I mentioned that would be a possible buying location, and the next buying location would be on the go with flow trend following long setup that came on this day. After that, price went up, came close to the upper boundary level. That is for the index. Individual stocks might have gone up further, and it is likely that those trades that taken at the go with flow long signal of the index would have covered the risk distance. At the right edge, we have one indecision at the top on Tuesday, and today a bear release signal with a bearish shape candle at pendulum high. For swing trading purpose, it is in an uptrend. However, we are not going to initiate any long trade now. The last long trade would have been taken at this point, and the one before that at the bullish headwind signal. Next, Chinese market, CSI 300 index. It is holding on to the multiple weekly trendline supports. The backdrop color is still bullish. However, for last 2 weeks in a row, I mean this week and the previous week, it is having inside candles, narrow range candles compared to the previous long range candle. In the daily chart, it came near the upper boundary, displayed two successive indecision at the top. Since then, price has not gone up, displayed a bear release signal on this day. Price is gradually coming down. It is still having higher high and higher low. It is still in an uptrend. However, there is no trade setup at the right edge. UK's FTSE index. In the last webinar also I mentioned that it displayed bear release indecision at the top and the backdrop color remained bearish. That is true this week as well, in this webinar as well. Backdrop color is bearish, shape is bearish. In the daily it is inside a triangle pattern continuing to move inside an extremely narrow range. No trade setup there. We'll have to wait until it clears the trend line support or the trend line resistance and then decide the direction and take a trade following the direction. Lastly, India's Nifty 50 index. In the last webinar, I showed that it made a new all-time high. Currently, the backdrop color is remaining bullish. It was gradually going up. Today, it displayed a bear release signal and came down little bit, still at the upper boundary level. Other than the bear release, it also created a reversal candle at pendulum high. That is always a warning sign. If I had long positions in India market, I'll be cautious now. I'll protect my profit. I'll not look for short trades. India market doesn't allow shorting for stocks. But I'll be cautious if I was holding any long stock position. I would tighten the stop. We looked at the global markets. None of them are currently giving a buy point. None of them are bearish as well. They are showing little bit of weakness. That weakness doesn't mean they are in a downtrend, not even in a sideways market. Most of them are in an uptrend. From the very high, it pulled back little bit. That's all. And if we now look at the USA market, for that let me use Q Elite on TradeStation. Let's start with IWM. We have IWM here already on the chart. Let's start with IWM. In the last webinar, I mentioned that I was looking for a short trade if price reversed from the weekly trend line resistance and price was near a daily trend line resistance at that time. That was in the weekend market roundup based on this day's candle, yellow candle. Next day price went up, that was Monday, and Tuesday it went up further. I kept an eye on IWM on Monday to see if the fine-tuned precise entry chart gave me a low risk shorting opportunity. It didn't. On the previous occasion, at this point I got a low risk shorting opportunity using fine-tuned chart. I took that. I booked profit at this point on this candle next day. But here on this day I was again looking for a short setup, but that didn't come. Let's look at the fine-tuned chart to see how it looked like. Fine-tune or precise entry chart. I use 5-minute interval in the morning session. It's using currently 5-minute interval. This was actually the location of the daily trendline resistance. On Monday, price opened here, and instead of coming below the early range low, it went above the early range high. So I didn't have any short setup. Price continued to go up. I scratched the shorting idea at the daily weekly trendline resistance because it was clearly going up, and I was not thinking of taking any long trade, so I didn't take any trade in IWM. That way we may anticipate a trade but don't actually execute the trade until the actual rules for the trade are met. The rules were not met in this case and I didn't initiate the trade. That turned out to be quite useful. In general, if you follow your trading rules, that tend to be more profitable over a large number of trades. I was disciplined in this case. As of today, the weekly is bullish in shape, bullish in color, daily bullish in shape, bullish in color, too close to the upper boundary level. I'm not going to take any long trade. It is certainly looking bullish. SPY, interestingly, the weekly backdrop color is still remaining bearish and it is displaying indecision at the top for 2 weeks in a row. Therefore, I am not going to look for any buy setup in SPY. Neither am I going to look for any short setup. You may see there are lots of trend line supports in the daily chart now, in the weekly as well. It will take considerable effort for bears to push through all of them downward. It's not going to be easy based on past experience. Therefore, I'm not going to look for any setup in SPY right now. QQQ. This is the one that I mentioned in the last webinar that I might look for a long setup. If I had to buy any of the market ETFs using weekly daily, not using intraday like I was trying in case of IWM, if I had to choose one of the market ETFs as of Sunday's market analysis to take a long trade, I would have chosen QQQ. That was based on this day's analysis that gave a go with flow trend following long trade setup. Since then, price has gone up, not enough to cover the risk distance yet, but it has gone up. Was I actually going to take a long trade in QQQ? No. I said if I wanted to take any market ETF long position, I would have chosen QQQ, but I was not going to actually take a trade in QQQ because, as I mentioned in the last webinar, I had a bearish view in IWM. So I had a mixed view on the market ETFs. I was not going to look for any long trade in QQQ. In any case, it has gone up. Short-term traders using intraday fine-tune chart could take profitable long trades. I did not. Right now, the backdrop color is bullish, though the shape is mixed. Daily shape is again mixed. Color is bullish. I'm not going to look for any long or short trend. There are trend line supports nearby. DIA, very similar to SPY. Backdrop color remaining bearish, has a bear release signal as of yesterday's close. However, it has trend line support in weekly, daily both. There is a trend line resistance also in daily. Therefore, no long or short trade in DIA. We looked at all the market ETFs. None of them are giving appealing trade setups, neither in the long direction nor in the short direction. In that case, it may not be so easy to find attractive technical setups on individual charts. Let's look at some of the individual charts. Let's look at Edu. I discussed Edu in the previous webinar also. I took a long position on this day using a bounce long setup. Price had tried to go down severely on this day. I didn't have a GTC stop order. I have a small position in this stock. That day price closed higher than the watermark support level. In weekend webinar, I mentioned that if I see price was closing below the low of this candle, I will consider exiting. On Monday, price tried to go down but recovered nicely. The day ended with a bullish shape candle. So I didn't exit my trade yesterday. Also, I didn't exit the trade. I'm holding on to the trade. I have a small position in this stock. The technicals are not looking very sound. So I am in a small loss, little bit bigger loss than I planned. My stop loss would have been somewhere here. Let's see where my stop loss would have been using the Q fine tune, not fine tune, Q protection signal. My stop would have been at 8.28 if I followed the rule. If I sized my position appropriately, I took a small position, so sizing is okay for me. My stop is at 8.28. Yesterday, in fact, it closed above that. So I am still following the rule. Let's see what it does. One reason I didn't exit the trade is it didn't trigger the Q stop loss that is calculated based on volatility. Another reason is this is a Chinese education stock. In QH, I actually looked up the industry strength, industry rotation for Chinese market. Currently, it is calculating India, not India, United States, USA's sector industry rotation. I'll keep it like that. But when I saw that Edu was coming down, I did in fact switch to Chinese market industry rotation, and I saw that in the Chinese market the education industry group was strengthening, and I have a small position. I bought it at a very low price, so I decided to continue to hold the position. If I didn't look at the Chinese industry strength, the same industry, education services, then I might have exited, or I might consider exiting if the stop loss was hit on a closing basis. That stop loss is not hit yet. I haven't checked the Chinese industry strength today. After this webinar, I will check that out. So I am ready with all the information that I need to decide whether to exit this position or not. This position is having a loss. The Q protection stop is not hit yet. Maybe hit today. We'll see. And if it is hit, I may take a loss and come out. No problem with that. I'm not expecting every trade to make profit. I'm just expecting to be as disciplined as I can in planning the trade and executing the trades. This was one trade that I discussed in several webinars. I think I shared it on the forum also. Let's look at another trade that I shared, I think 2 days ago. Let's look at the post when I shared it so that we know what was the basis of my sharing. I share my ideas on my website under this category 360 degrees because I look at sector, industry, fundamental, technical, everything, and of course the market level. 360 degrees trading techniques and ideas. Not meant to be stock tips, but a disciplined way of analyzing the market and stock. I shared a stock on L. The ticker symbol is L, L for London. 2 days ago, that was on 7th June. Let's see on what basis I shared the shorting idea. The industry, property and casualty insurance was weak, and it was weakening. From 59 it came to 35, so it was weakening and relatively weak. The stock itself was undervalued. 69% of the 55 PR stocks of Lowe's Corp L were down on that day. So the fundamentals allowed me to short, industry allowed me to short, and on technicals I saw an indecision at the top. After that, the backdrop color turned bearish, remained bearish until the time I shared it. It also displayed a bear release signal at the top. In the daily, it had indecision at the top, then a bearish headwind. Since then, price could not go up. Instead, it created trendline resistance and trendline support. It was moving inside a very narrow range, and right on the day I shared the idea, it was breaking below the trendline support with bearish flow at pendulum high. So I thought it could be a very low risk shorting opportunity. Stop would be just above the trendline resistance, very narrow stop, and we were able to short it at the very top after it could not go up for several weeks. So it had some time to decide whether it wants to go up or not. So far it looks like it is not wanting to go up. As of the time I analyzed it. So I thought it would give me a low risk shorting opportunity, and I shared it, the 360 degrees analysis. Let's see how it is today. L. I shared the idea based on this day. The trend line support was indeed broken. Yesterday it opened down, it had a gap down open. However, it recovered. Where did it recover? It recovered to actually below the trend line resistance that was broken. We can check that from the template that has the historical trend lines. This is the trend line support that was broken, and if I extend it, price tried to go up but closed below that. That may be like a dead cat bounce, and price may go down from here. It happens many times like that. In any case, our stop is very narrow. I have a short position in L that I took when I shared the idea using options. I think naked put options. I usually avoid trading with naked options unless, as I mentioned many times, I am shorting at the very top, as was in this case as pendulum high. Shorting at the top with naked put options has the advantage that volatility is in my favor. Time decay is against me, but volatility being in my favor compensates to some extent to the time, that effect of time decay. That's the only time I may sometimes take naked options, as I did in case of L. Now yesterday I think I shared another shorting idea, and as usual when the market is at the top I am starting to consider shorting, but I am taking small risks in each trade. Small risk in each trade. So this is the idea I shared yesterday in Philip Morris PM. Let's check the 360 degrees analysis again. Industry was very strong, 129 score, cyan color relative score, and it sharply dropped to 5 yesterday, 8th June, when I shared it about 2:40 p.m. Eastern Standard Time. The tobacco industry decelerated heavily. The relative score came down sharply. I found PM, the stock in the industry, it was down by 2%, overvalued stock, some earnings growth. However, in Q systems, we are allowed to short based on either valuation or growth. So I was allowed to consider shorting. It was overvalued. And I noticed 100% of the industry's peers were down yesterday. That also helped me decide for the short idea. And the at a glance weekly daily chart was very similar to L that I shared just a while ago. In the weekly, multiple indecision at the top, bear release, next candle tried to go up, remained within the range, and when I shared it, it had a bear release again. Price was coming down with backdrop color bearish, shape bearish. Similar to L, it seemed like it was not willing to go up. Of course, it is in a congestion area. It could go either way from there. Therefore, like L, I was looking for a breakdown to the downside. And when I shared it, I saw it broke one trend line support. And I mentioned in the post that one may consider shorting if the very next trend line support is also broken. In the daily, it was also creating a false upside breakout with a bearish flow, with a bearish pressure as well, and a reversal candle at pendulum high. That is always a warning signal. And it was inside a Q squeeze as well. I shared it at 2:50 p.m. Let's see how it closed. Philip Morris. It closed in the daily right on top of the next trend line support. One trend line support is broken, it closed right on top of the next trend line support. And if we see the additional signals, we can see it had a bearish kahuna. Candle color shows bearish bongo, and importantly biggest down move in 3 months. Biggest down move here 5 days, 1 month, and also 3 months. And I mentioned earlier the biggest moves over 3 months may just be the beginning. It's not too late. Certainly it's not too late when you look at the weekly chart. Also it had a red candle high. Here we have a reversal candle at pendulum high, and using the HSI like indicators you have a red candle high, bearish pocket pivot, MOBO breakout from a squeeze. This is the traditional squeeze with a bearish kahuna. Lot of bearish signals in both Q and HSI like indicators, and it gave a breakout setup. However, you don't initiate a short unless the second trend line support was broken. Another way could be if you identified it early during the day, then you could short it using fine-tune chart. Then you could continue to hold the position. If you identified it late in the day, you wouldn't initiate the trade, at least not if you were following Q guidelines. You wouldn't initiate the trade because it did not break the trend line support. Using fine-tune chart, you could initiate the trade early if you could identify it earlier. How could you identify it? You could identify it probably using Q sonar or Q finder earlier, or you could do that using top-down analysis. Look at the weakest industries, look at the weak fundamental stocks, and look up the technicals. Let's look at the fine-tune chart, see how one could use the intraday chart to initiate a very low risk trade. Here yesterday in the morning session, the early range low and early range high pivot levels were formed. It's currently with 10-minute interval. Let me change to 5-minute interval for the morning session. 5-minute interval now. Early range low, early range high. Based on industry and fundamental strength, we were going to only take a short trade. And it did drop below early range low. So you could short it somewhere here. Put stop just above the early range high. And once the risk distance was covered, you could easily close at least partial position. And remaining position you could hold confidently at the end of the day because it closed very close to the low of the day. But I would book partial profit at least looking at the daily trend line support that was there. That is how you may use fine-tune chart to enter trade with extremely low risk and also book partial profit to make sure that the trade is more or less guaranteed to be profitable, barring a huge gap up today. You may keep an eye on PM to see if it can break below the daily trend line support. Even better would be for price to open little bit above the trend line support and then come down below it, and you may look to short it using fine-tune chart if it comes down below the trend line support, following a proper Q trade setup on the fine-tune chart, of course, not blindly taking the trade. And when I try to take such precise entries for swing trading purpose, I keep an eye on the market ETFs and the market internals. If the market ETFs are looking all bullish, I wait patiently to see if at some point the market ETFs are also pulling back. On the other hand, if the market ETFs are bearish, then I may use an early range breakout to the downside for the individual stock to initiate a short trade. Those were few trades I shared recently. Not many in the long direction. Not many in the long direction except some healthcare stocks. I mentioned several healthcare stocks. Those were fundamentally very, very strong. Let's look at some of them. EBS. Let's look at its fundamentals also. I should also explain how I traded the Labu. This was for the third time, I think. EBS, sorry. EBS. EPS. I mentioned about the stock, very strong fundamental stock, and I saw that it was consolidating in the weekly chart with multiple long lower tail candles with multiple indecision at the bottom. I initiated a long position when I shared that analysis. It also displayed 3 bullish headwinds in the daily chart, and it had a gap up open on this day with a bullish flow, and that day also gave a viable gap up here, viable gap up and pocket pivot, Mobo breakout from a squeeze with Kahuna, BGU and a bullish flow. So somewhere around that time I initiated a long position, don't remember exactly when, probably on this day if not earlier, but certainly not after this day, and that trade is in a profit. So I got this stock at a very low price in a separate account. I'm trying to buy some healthcare stocks, strong fundamental stocks at a very low price and try to hold them longer. This was one of them. Another was Vivo. Let's see the fundamentals have come or not. Yes. See the fundamentals for EBS. Undervalued stock with extremely high earnings growth. Extremely high earnings growth for 3 quarters, 3 years, as well as revenue growth for 3 quarters, 3 years. Robust earnings quality with a short squeeze potential. Makes money, of course. Difficult to get a better fundamental stock than this when looked at through Q scorecard. So that was a reason for me to deciding to buy it at a low price, and Vivo was another. Let's look at the chart. Vivo. I took a position somewhere here. And I mentioned also, I think, that when it came to the yellow direction line, a pullback was likely. And I noticed that it had a huge gap down huge gap down open from the close of this point to this point, huge gap down open and an equally sharp recovery. So again, I didn't put any GTC order. I'm trying to hold these stocks longer term, no GTC stop order. And looking at this sharp recovery from the watermark support that created a false downside breakout, I mentioned to some traders at that time that this may be a classic shakeout of weak hands. And I held on to the trade and it very nicely went up. Now it is right at the trend line resistance. Yesterday price pulled back below the trend line resistance. I have a small profit in the trade, but I could track the stock and I could anticipate that this was a possible shakeout of weak hands, and so far that has come true. In this stock also, I am waiting to see if the yellow direction line is broken. Last time it came down a bit, but a very nice recovery. Now I am waiting to see if it can regain the yellow direction line. If we check the fundamentals, again a great fundamental stock, excellent valuation, earnings quality, short squeeze potential, high earnings growth and high revenue growth. So I'm holding a long position in this as well. And Labu, let's look at Labu. LABU. I initiated a long position in Labu and I shared it in the webinar at that time, probably when this trend line resistance was broken after displaying a bullish headwind. And I mentioned that there was another trend line resistance nearby. At the time of entry, the trend line resistance was around 70 level, around 70, some distance away from my entry price. And how did I take the trade? I mentioned at the time I took a synthetic long, but not at the money. I shorted the put at the trend line resistance, next trend line resistance here. Shorted the put at this level and bought the call at the same level. And my plan was if price came to the trend line resistance, I would have enough profit. I could book profit at that time. And indeed, after moving sideways for a few days with very narrow range candles, doji like candles, on Monday it opened near the narrow range but closed sharply higher, went above the $70 price level. That was my short put strike, and I had enough profit in the trade. For example, if I took, let's say, 10 synthetic long legs, then if I closed 5 of the synthetic positions and also closed 5 of the short puts, the remaining 5 calls were totally free. And I like to do that when market gives me a chance to take back my money, take back some profit, as well as hold on to partial position if I wanted to. I like to take the money off the table, my initial investment, and I did that with Labu. My money is back. I may be holding a smaller position to see if the Labu goes up. The call options, some call options I may be holding, but I have received my money back and I have already made some profit in the trade. This was the third time. I mentioned earlier 2 times also how I traded it. In each of those cases also I shared the trade before knowing the result, because I am not trying to show profit in every trade. They happen to be quite profitable if you are following the, okay, let me rephrase. They happen to have quite good success rate. The absolute profit is a function of how much money one is putting in the market. The more you trade with small positions, you may gain confidence and then increase your position size, and the dollar amount will likely go up over time. But key thing is to have high success rate and maintain a reasonable reward risk ratio when taking the trade, as I am doing. And this was again a trade where I got my money back. I am building position in several healthcare stocks, but Labu is not a stock, it is a 3x ETF. Those are not instruments to hold for longer term. They are inefficient compared to stock. So I was not planning to hold Labu for a long time with my money at risk. Now my money is back. So the remaining position I may hold, but the first sign I see of it coming down, I'll exit the remaining position. Whereas the healthcare stocks I will hold longer. At least that's my current plan. We'll see how it goes. I am therefore holding some short positions like in L and some long positions like in EBS, in Vivo, and several other healthcare stocks as well. We have some time left. Okay. Let's look at the finder. Let's do a bottom-up analysis to see if it is easy to find trading ideas at present. But before looking at finder, we may complete our regular analysis. Let's look at the sector industry rotation from QH. Yesterday, overall, the market was quite bullish. 82% of sectors went up, almost 80% industries, and 70% stocks went up. The percentage of stocks above the midline of the bucket analysis, above the midline of Bollinger Band, you may say, that went up by 5%. So 5% of S&P 1500 stocks crossed over from left to right in the bucket analysis. The percentage of stocks in the most extreme bucket, outlier bucket greater than 10, is at 11.8%. That's not at an extreme. Extreme will be levels of 30 or so. However, it did jump by almost 10%. Whenever it jumps by 10%, 15% or more in one day, that is something to take note of. So I took note of that. It is bullish, maybe getting a bit too hot, spending too much fuel to go up in one day, spending too much fuel. But it has not gone up to the sky high level yet, it's just spending too much fuel. We keep note of that. The 1 month to 1 day, 1 month to 1 day sector industry stock advanced decline rate, this is bullish. Just looking at the green color tells us that we don't have to think twice about it, it's bullish. Therefore, the market breadth looked at from sector industry stock is quite bullish. No sign of weakness there. Now, if we look at the technical breadth weekly picture, that is also bullish. 72% of technical signals, Q signals and trade setups bullish. 89% of strength signals, 69% of trend continuation, and also 69% of reversal signals bullish. The weekly picture as of Tuesday's close is very bullish. There is not a very high number of bearish headwinds. Some bearish headwinds, but not a very high number. No warning signal from there. And if we see yesterday's technical signals, bullish again. 75% of all signals, 76% of strength signals, 78% of trend continuation, and 70% of reversal signals bullish. Weekly, daily, technical breadth is also bullish. No weakness there. I had some error when I was trying to do something, so I may not be able to open the total view, but let me try. Yes, yes, cannot open the total view. Market breadth, so we will not look at that today. If you have access to Q global market breadth, you may keep an eye on that. So long as the market ETFs are concerned, the sector industry stock advanced decline breadth and technical breadth are concerned, there is no bearishness. One warning sign may be that the number of stocks giving bullish signal yesterday, 60% of that came from price extreme high. That is one signal, to one overheated condition to take note of, just like we took note of the spending of too much fuel for stocks to go up yesterday sharply. There is no other weakness. So in this market, difficult to short. However, as you may see, once again, before others are bearish, I am starting to short some stocks, but I am shorting weak stocks at a high price level with low risk and using put options sometimes when the options are liquid, which may turn out to be lucrative trades if price comes down even little bit, because volatility will increase. And if they go up, my stop loss is narrow. Shall we look for short trades or long trades? That's a good question. Let's see. Let's see if we had many bearish breakouts. I see here we had 61 bearish breakouts, and of course many bullish breakouts. Some of these breakouts would have been stocks like L and PM that I shared earlier. Those were bearish breakouts. Let's see, yesterday did we have other attractive bearish breakouts? Let's look for bearish breakouts, 61 of them. That's a lot. So what I'm going to do, I'm going to look for HSI like signals from them. I put my cursor on the symbol header column and I click the lookup finder that highlighted all the rows, and that has also selected those exact stocks in all the tabs, including the alternative daily signals tab. So I have all these stocks, all those same stocks here. Now what I'm trying to do is see if they have MOBO breakout from a squeeze with a kahuna to the downside. I'm left with 10 stocks. Two of them also have BGU. Many of them have big move down. So why don't I look for the stocks that went down with big move with MOBO breakout from squeeze with kahuna, and they are giving bearish Q breakouts. That's how I started the analysis. The trade setups are the Q trade setups that can be breakout, pullback, go with flow, bounce, headwind box. Because there were many breakouts, Q breakouts, I shortened the list by focusing on stocks that also gave MOBO breakout from squeeze with kahuna with also a big move. Now let's open them with Q charts one at a time or together. Okay, why don't I use Q Elite for that? I'm clicking the grid or radar button to get the ticker symbols for these stocks. Go to Q Sonar, and this is the combined sonar with both. Didn't I press the button? No, maybe something wrong. Okay. Let's open with Q Global. I'm opening with the Q default daily chart. If I see an attractive signal, I look at it with weekly daily template, at a glance template. This is Philip Morris. This I already shared yesterday, and you can see I could identify it well before the market close. One trend line support broken, another we have to wait for breaking. Bear release, bearish flow, reversal candle at the top with high volume, bearish pressure, many bearish signals. I already shared that. Let's go to the next stock. FBK Financial, FBK. It was moving inside a very narrow range. It was supported by the trendline support, had a gap down open yesterday, bearish flow, bearish pressure coming out of a Q squeeze with high volume. It already gapped down and it is right at the watermark support, and it has many doji-like candles, including yesterday's candle, which is not giving me the confidence that I need to try a short trade here. So let me close it. AEP, this is looking better because it decisively broke below the trendline support. It was also moving inside a range. Bearish pressure, high volume. However, there is a long lower tail. So even if I identified the stock yesterday, I wouldn't short it at market close. Looking at the long lower tail, if anything, I may consider looking for a short trade today. But this is not my choice today. I like PM more, or the way L came down below trendline support. I like that more because those breakdowns didn't have long lower tail. Let's close this. This one is looking better. Aclaris Therapeutics, ACRS. Here it has a decisive breakdown from a trendline support coming from reasonable distance away, moving inside a range just before the breakout. Yesterday broke out sharply to the downside, bearish pressure. Also a reversal candle came out of a squeeze. So this is giving a more attractive shorting opportunity. Yes, the stop will be little bit far, but that's okay because if the stop is far, we may adjust the number of shares to keep the risk same in all our swing trades. I will analyze it further using weekly daily at a glance. Let's see if we have another attractive one. POST broke below one trend line support, but there is another support nearby, not considering shorting that. PepsiCo, PEP Pepsi, didn't decisively break the trend line support. Not going to short it. Close that. HBAN broke below trend line support, however has a long lower tail, not my stock to short. May keep an eye today, but I wouldn't short based on the current chart formation. Close that. EPAC, deep gap down open, a reasonably nice recovery. It is still below the trend line support. It may be a dead cat bounce. If it comes down from here, it may give a very low risk shorting opportunity, because if it comes down from this trend line support now, which may act as resistance, then we may put our stop here just above that if price starts to go down. But that is an if. We'll have to keep an eye, not a short idea based on Tuesday's close. Close that. Dish Network, this is looking better. A clearer breakout, very small lower tail, don't have to consider that in my view, at pendulum high. Earlier you may see bearish headwinds came at the very top. Price came down from there, very slowly tried to go up to indecision at the top. Then yesterday broke down sharply below the trend line. support with bearish flow. We'll keep an eye on this using weekly, daily. Okay, so we are left with two stocks, ACRS and DISH. Let's look at them using weekly, daily. Let's use, why don't we put them in the sonar? DISH and ACRS. Let's read out the signals from Q Elite sonar. ACRX in fact had a gap up open, 5% gap up, that's a big gap up, and then since open a 21% drop. That's a nice bearish reversal. 5% gap up, then 21%, 21.2% down from there. On a closing basis, 16.2% down, bearish false move, bearish reversal, very high activity leading to the downside, bearish pressure, bearish breakout, bearish flow, also MOBO breakout from squeeze with Kahuna, all to the downside, even a bearish ice hole and red candle high that is failed at extreme. Now it is below lower boundary because of the sharp drop. Direction is medium. Of course, relative performance is weak. So ACRS is giving plenty of bearish signals, the same signals that we saw from Q Finder, that is based on Q Global. And Dish, the other stock, from open down by 3.2%, from closing also 3.2% down with high volume, with bearish pressure, bearish breakout, bearish flow. Once again, MOBO breakout from squeeze with Kahuna. These are the things we looked for in Finder when identifying these two stocks. The same signals are appearing in Q Sonar as well as Q Finder. Let's look at them using the weekly, daily at a glance template. Very sharp breakout to the downside. Plenty of bearish signals all along. And again, the first big drop in 3 months is not necessarily too late to short. You may keep an eye on this. However, if you are shorting it, you may size the position so that don't take too much risk because of the stop being far away. Or you could use fine-tune chart to take a precise entry and putting stop on the fine-tune chart. You could do that as well. Weekly, daily, everything is looking bearish. In fact, weekly also has a reversal candle. Weekly, daily both have reversal candles. Those are very bearish patterns, and I expect it to go down more. I will be happier if it could come back to the trend line support, reverse from there. Then our risk or stop loss would be nearer. Still, this is looking weak enough probably to short. And the other one is Dish Networks, DISH. Let's check it out using weekly, daily. Weekly backdrop bearish, daily flow bearish, breaking below trendline support with bearish pressure at pendulum high, was in kind of squeeze. In daily, we know what we would have also. MOBO breakout from a squeeze with Kahuna, biggest down move in 5 days. This may also give a short setup. Let's look at their fundamentals before we decide whether to short or not. Dish, let's look at their fundamentals, and then I'll check their industry also to complete the 360 degrees analysis. Dish Networks industry, cable and satellite, Q edge graph shows the relative strength weakened sharply, and absolute performance is also negative over 5-day, 2-day, 1-day periods. and the relative strength declined heavily. If we look at the rotation, it clearly allows us to short. If we check the fundamentals, it is still retrieving. That's fine. Dish networks, I think it may be in Q edge also. So let's look that up. Dish networks. How is the fundamentals? Medium valuation, high earnings growth. So this is not a very weak fundamental stock. In terms of growth, it has steady and reasonably high earnings growth for 2 quarters in a row, and it is accelerating also from before that. So fundamentally, it is not the weak stock that I like to short, but then again, I have mentioned that out of all the dimensions, if I had to give up on any one of them, I would give up on the fundamentals, that too on the short side only. Therefore, I may not mind shorting Dish, and this is one of those stocks that have liquid options, so I may not mind shorting it with options to reduce the risk further. This has a possible short opportunity. Fundamentals not weak, but I am okay to ignore only one dimension, that too on the short side, that is fundamentals, because fundamentals take time to change. By that time, I'll be able to exit, especially when the industry is weak as it is now. Now the other stock was ACRS. Let's check its fundamentals. Yes, we have the scorecard also. The scorecard shows it's not weak. Now ACRS, pharmaceutical stock. Let's check the industry strength. The relative score declined sharply yesterday, and the absolute performance turned down. Earlier it was positive. Let's look at the rotation. Pharmaceuticals is weak, so that allows us to short. It decelerated as well. Well, here we have a better shorting candidate. In terms of fundamentals also, overvalued stock with negative earnings growth and poor earnings quality. So if I had to choose one as the weaker stock for shorting, ACRS is certainly that. And if I was willing to short a fundamentally modestly strong stock like Dish at the very top with a breakdown setup, I may not mind doing that also, but of course ACRS is fundamentally also weaker. Therefore ACRS gives us a 360 degrees shorting idea. Like this, in whatever market we are in, using the Q unambiguous trade setups, you are able to find buying opportunities as well as shorting opportunities. And we align forces from multiple levels: industry, fundamental, technical, market also to the extent we can, and that gives us truly high probability trades. We are at the 1 hour point. Let me end today's session here. Thanks a lot for joining me. I look forward to seeing you in my next session, which will be during the weekend. I will announce the date and time on Twitter. Mostly I have them on Saturdays. I'll announce the time on Twitter. And if you are subscribing to my YouTube channel Trading Profitably, you will get notification from there as well. Thanks once again. Keep safe, and as I always say, no reason not to do so. And as my live examples demonstrate, no reason not to trade profitably. Thank you.